Good morning, traders. Today is Thursday, the 16th of September. My name is Neville Hornsey, market analyst at YouTrading. Today, I'll be talking about the British pound versus the US dollar. Okay, as always, going to start with the YouTrading.com Forex Heat Map. Starting from the top, the euro is pretty weak across the board, only stronger against the Swissy. So if you go down to the Swiss franc, that's obviously the weakest of the pairs today. And then the strongest could be the US dollar. It's pretty much green across the board, sort of flat to the yen, and the yen itself is also pretty strong. Coming down, New Zealand dollar is pretty strong today, apart from against the yen. So kind of a mixed bag with some flows going into this safe haven, but out of this safe haven, some flows going into this higher yielding currency pair, but not necessarily into the Canadian and Aussie. So overall, Forex Heat Map shows sort of indecision in the markets at the moment, no sort of clear flows from one end to the other. If we go to a economic calendar, what I've done here is I've filtered out all of the sort of scheduled information and just left the US dollar and the British pound tier 1 data. So on Tuesday, 2 days ago, we had the US CPI, and that came in weaker than expected. And then yesterday we had the British CPI year over year, which came in slightly stronger than expected. Today we have core retail sales, which are important, obviously, and we also have some initial jobless claims, which has also been kind of a pivotal moment in the week. So currently, just going by this, the pound data is stronger than the US data. Now, if we go to a chart where you can sort of see, basically the black line is the British pound since 1994, and then the orange and cyan lines are the 2-year yield and the 10-year yield. So these are like the sort of interest rates that go with the fixed income. So as you can see from the top to the bottom, top left to the bottom right-hand corner, the sort of direction of travel for the British pound and these yields has been lower. Recently, we obviously had 2016 Brexit, then we had a relief rally, then we had COVID, that was a lower low than the Brexit lows, and then we've been traveling higher. And you can see that we've now got this double top between 2018 and 2021. Now, the reason I've got this up is because obviously the yields are tracking, and if inflation's going to go higher, then it's quite possible that the interest rates will go higher and these yields will go higher. So, we could be going into a rate hike cycle in the future. And if that was to happen, when we see the 10-year here rising, that's when we get an acceleration in the British pound versus US dollar. Same with the 2-year, the acceleration higher, and so forth. Wherever you see the yields accelerating higher, the British pound also accelerates higher. And if you look to the bottom right corner, we've also got this slightly curling up 2 and 10s. Now the 10 is above the 2-year at the moment, and traditionally, I guess, that has been in a more sort of pronounced downturn. In recent times anyway, since the financial crash. If we can get the 2 above the 10, then we might be into this sort of regime where rising yields really accelerated the 2002 up to 2004 British pound versus US dollar. So that's what I'm looking for. I'm looking for this curve to invert as it is now. And if we go to the active trader, look down here on the left hand side, we've got the active trader sentiment indicator, and 60% of the traders on this platform are actually bullish the British pound versus US dollar. So there's a slight bias towards a long pound. Generally, if it was getting to the 80s and 90s, I'd be thinking that they were completely wrong. But at the moment, I'm actually going to say that I agree with them. We've had a low here. Let's pan out a bit. We've got this trend line rising from basically the end of August. We had an impulsive move up and a correction, and then another impulsive move for this sort of messy correction here. We did get a spike higher above this sort of double top around the 1.389. So we took out some stops. there's obviously some sellers still out there, or a lack of buyers at least. And maybe these buyers in this trend got out of their position up here as, retail traders jumped in. Retail traders, obviously have kept their longs for the time being, because 60% of them are, the majority of them are actually bullish. And here, like this week, I've been just leaving this weekly pivot line up. If we were to break lower, then there is this market structure here at the 1.378 level, which, we could test and then hopefully find some new support. It's old resistance becomes support. We've also got, not equal lows, but, similar lows. We obviously swept this swing low here. We could sweep this swing low here, but then that would be a lower low, a lower high, and another lower low. So, preferably we don't sweep these lows and we don't touch this market structure. Preferably this weekly pivot acts as support. It's been a bit of a magnet this week. Every time it's pushed up, they've pulled it back down. But that can only happen so long. When we go to the 4-hourly, ultimately I'm thinking we go up towards these swing highs here around the 1.39, 1.398, and then ultimately the big figure 1.4. So, for traders to do that, they've obviously had a big drop, a base, and a rally, and they've just returned essentially to this demand zone here. So where you see like a big drop, a base, and then a rally at the sort of top of the base, that's where I look for more buyers to come in. So those, say this was like all buyers, and then they left their sort of stops up here when they sort of saw the market coming down. More buyers would have jumped in, like I said, at the break of this. And anybody that was looking to get out of this long because they were worried about this sort of market structure, they would have used this retail push of longs to basically exit their sort of longs and go short or out of the market. What we're seeing now is that, we didn't come down to test this low. We kind of paused at this sort of pivot line around the 1.38. And now buyers are more encouraged by this big drop, base, rally, and at the weekly pivot, at the 4-hourly moving averages, there's obviously a few confluent reasons to get on board. And even if we only travel up to this little double top here, and don't actually get up to the 1.4, there's still a bit of a trade to have. You could put your stop under here, get long here, and that's like a 1 to 2 risk reward ratio. So that's what I'm thinking at the moment. I'm thinking long term, we're looking for the British economy to sort of progress faster than, say, the US economy. We're looking for the yields on the 2 and 10s to basically rise, go into some sort of rate hike cycle momentum. And for that to bring the British pound higher. And then ultimately, if you go to, I say that the weekly, get above the 1.4, get above the 1.425, and then these double tops back from 2018. All right, so that's kind of what I'm looking at the moment. I hope that's useful, and I'll speak to you tomorrow.